Well, good day there, Wealth Press viewers, subscribers, traders, and investors. It's that time again. It's a weekly wrap-up, and I'm here as usual with Roger Scott. Roger, thanks for joining me today.
Absolutely. I'm so grateful to be here, James. How are you?
I'm well, thank you. I'm glad to have you. Roger, it's been earnings week, so give us a snapshot. What does the earnings picture tell us about this week leading up to the election?
Well, I'm glad you asked because, right now, last week it was a little too early. There was only about 49 members a Friday of last week, but now we're getting closer to 100. So we've got about 20%, and total earnings are down about 11% for the same period a year ago, with negative 2.5% lower revenue. Now, 86% have beaten earnings per share estimates and 81 have beaten revenue estimates. But we got to keep in mind, and this is where we got to remind the folks at home that these estimates have been beaten down and revised lower quarter after quarter now to take into effect the potential downside of COVID-19. So the fact that we're seeing so many beating the estimates is not because things are doing so well. It's because the estimates have been beaten down to death. Okay. So let's be very clear on that. Now, looking at the quarter as a whole, now this is what people at home should be writing down right now, because if we do better than this as we continue going through, and by the end of next week, we're going to be done with about 60%. This is prime time window right now for earnings. They're flowing hard and fast right now. So I think these numbers are very important to pay attention to, because this is what the market is pricing into its value, okay? And if the numbers are a little better than this, then the market can jump based on that, or, fall if they're weaker. So
Sure.
The total expectations is a decline of 18.3% on 2.5 lower revenue. The growth has been steadily improving since July, but the pace of improvements has started accelerating because companies are coming out with, again, for the same reason we've discussed. Now, sectors with the weakest third quarter outlook remain social distancing exposed spaces like transports, energies, consumer discretionary. The lowest decline has been in utilities, technologies, and retail. I mean, retail's down 3.5%. And most of these are 3.5%. Energies are down 113% from a year ago. Consumer discretionary, 85%. So it's bad. It's bad. Now for the current, sorry, go ahead.
For the online retail, the numbers are down, but is that weighted by the bricks and mortar retailers as opposed to the online retailers? Does that number incorporate that segregation?
It does completely. This is a very, very broad number. This is the whole kit and caboodle, everything.
So this is Amazon as well as JCPenney.
Correct.
Okay.
Yeah, and Macy's, all of it.
So that doesn't really give us a clear snapshot, because Amazon has really outperformed, and obviously the Sears, JCPenney's are on the verge of collapse.
A little bit even past that.
Yeah.
they are past the verge, James. You're being too nice. So again, things look like they are improving, and it looks to be like we're going to level out around 2021.
Yeah.
But and we have started improving since July. But again, when you look at these numbers and you look at the unemployment rate, and here's the problem: we are going down. We were at 1 million or above 1 million March, April, May, and it started going down. But I guess it kind of just flattened out. And I mean, we've gone from 1 million to about 750,000 in 7-8 months. So look, if people don't work, if people don't work, the economy just it's all a vicious circle, unfortunately. And the problem is it's not going down fast enough. So that is causing me to really pause on these earnings that I am seeing. The fact that unemployment is so high. So I kind of wanted to bring that into the mix as well, because you have two roads there kind of going into potentially divergent territories.
You bet. So it's been the case this year where earnings haven't necessarily been relevant to a company's stock price performance, especially in the context of all of the stimulus that has generated increased liquidity coming into the market. So are these earnings necessarily bad news for the stock market going forward?
They're not necessarily bad news if we can come out of it and snap back fast enough, because the market's always pricing in everything ahead of time. We're always looking at the future. The way I analyze the market is I'm always trying to look ahead. I don't know if you've noticed in my analysis, I'm always kind of trying to be two, 3 steps ahead, because that's how the market reacts now. You think of something that could happen in the future, you look at a stock and it's already, it's kind of like freight shippers and papers. It was just something you see coming a mile away if you're experienced. But in this case, I think what the economy is doing is pricing in the hope that all this aid and all this stimuli is going to kind of wash out the earnings, and before things get really, really bad, they'll begin picking up. I think that's the market's perception. We know things are bad, but some things are good. It's not all bad. It has not yet become a financial it's still a medical pandemic, and if we can come out of it fast enough, we will be okay. Now, we've seen it, and this was something Biden was saying in the debate yesterday. Actually, it was the first person I've heard say it. It's kind of interesting. We were looking at the time clock was October, November, and now it's moved to January, February. That's a big shift. That's a major, major shift. But now it looks like it is going to happen around that time, because major companies, like last night, I think Johnson & Johnson, if I'm correct, came out with something that says it's gotten approval. Now it's a matter of, okay, well, how much better is it going to be? And I think here's where we're going to have a major problem, James. I think the vast majority of the public still is, and I was actually out to dinner with a psychiatrist, and we were talking about mass psychology and how people are thinking. I think the mass majority of people, if you were to ask them or poll them, they would say, yeah, vaccine comes out, we're in good shape. The world doesn't work that way. We're not binary. We didn't wake up one day and say, oh my goodness gracious, there's 2 million people dead of COVID-19. It all happened in one day. No, it took time. And that's what the market, I think, is battling right now and having a difficulty processing. I think a lot of the people who are picking these companies, like the airlines and the cruise ships, and the hotels, I think they're saying, well, it's going to happen. It's going to happen. But I think as it's happening, the reality will set in. In other words, let me give you a couple of scenarios. And this is kind of what I was reading a few weeks ago. And I wasn't even, because, you and I, we're not doctors. We don't think like the medical profession, but this is something what a doctor was writing. And he said, look, think about it. A vaccine comes out. Okay, well, is it going to work on everybody? We are not going to find out for at least 6 months. How effective
how many doses are going to be available, and who's going to get them? I mean, it's not even a given that there's going to be sufficient production capacity to have a serious dent in the problem.
Exactly. And then is it the vaccine? There's going to be, again, lay people, they don't think this way. It's not their fault. They're not doctors. But here's another one. Is it a vaccine that's very effective in late stage battle, or is it a vaccine that if you take it, you don't get sick? How many people are going to be allergic to it, and how many people won't take it because they just don't want to? So all of this shakeout, it's going to take at least another year to kind of settle.
Yes.
And while that's happening, you can't tell COVID, wait, give us a year. It doesn't work that way. So we are going to have, and I'm not a conspiracy theorist. I'm just being a realist here. We are going to have a second wave, just like Europe is having a second wave, just like we have a heightened flu season. It's called flu season. And, we have a flu vaccine. Does everybody take it? Is it effective on everybody? It's the same song and dance. So I think as we get deeper into solving the COVID problem and start dealing with the actual minute factors, I think that's when people are going to start really, the forest. We're now looking at the forest. I think we're going to start looking at the trees, and the closer we start looking at the trees, the more pitfalls we're going to start finding. And I think that's when a lot of these companies are really going to have that second the shoe drop.
Sure. Okay, let's focus on the upcoming election now. We're 11 days away, 13 days away. Did the debate do anything for you in terms of swaying your impression of who was more likely to prevail in the election?
No.
Okay.
No. But with that said, I actually thought it was a interesting debate, and I actually learned some interesting thing. And I don't think it was like two kids going at it like the first one. So I think there was a remarkable improvement on both candidates.
Okay. So at this point, as investors looking into the future, should we be positioning ourselves for the eventuality that either candidate might yet win?
Well, let me answer this question like this. Before the election, the market was pricing in a Biden win. And again, please don't hate me, folks out there. I'm only the messenger. Okay, I'm telling you what the market is pricing in. I am a Republican. I'm a conservative Republican for anybody who's interested. But this morning after the debate, before the opening bell, I looked at the Russell. The Russell was higher. The S&P was lower, confirming what we've been seeing almost every day. If you look at stocks like Alibaba, which do not like Trump, okay, they're doing very, very well. They're doing very, very well. The Russell, the BABA, the NEE, the First Solar, all of these stocks are literally sitting at either right at old highs or penetrating, making new highs. They're doing really well. And again, I'm only giving you that. But let's now take the opposite end of the coin, okay? We've seen last election, the spread between the candidates was wider than it is right now. The market was also assimilating the Democrats were going to win. And on top of that, the spread wasn't narrowing at the rate that it's narrowing right now. So, and let me add more to that. I'm going to get a little statistical on you, James.
Uh-oh.
I'm going to give you a 200-year analysis, okay? Anytime you have a presidential election, and when there was a re-election, and in the preceding 3 years, the stock market was up 30% or more, the incumbent continued and got reelected. Now, this goes back to George Washington. They used banks instead of stock markets back then because there was no stock exchanges. This has won 16 times, 14 out of 16 times. The 2 times that it didn't work was 1992, President Bush versus Clinton. Market was up 36%. And the time before that was 1800. And I don't remember who was there, but the banks were up by 30% or more. So it did not work twice. 87% chance that Trump wins the election because over the last 3 years, the stock market gained more than 30%.
Huh. Well, that's interesting. So are there any particular strategies that you recommend adopting this close to the election for our subscribers?
I would right now, if you think Trump is going to win, you want to be in Caterpillar, Oracle, and Twitter. If you think Biden's going to win, you want to be in the Russell. You want to be in NEE or FSLR Energy. Any big solar company like those two that I just mentioned. And you want to be in BABA because Trump, China,
Sure.
Biden.
I would add to that the cannabis sector has been performing well in the U.S. as a result of Biden's apparent strength in the polls.
I was actually going to ask you about that. That's just one sector. For some unknown reason, it hasn't been on my radar, but I was actually going to ask you that. And yeah, folks, that's another sector for Democrats. How has it? Has it been moving a little?
Sure. Well, we follow in our one of my subscriber portfolios, we follow Curaleaf, which is the largest retail cannabis provider throughout the U.S. now, and it has increased in value by about 30% since the beginning of September.
And I know Trulieve has been doing really great. I know that that since we talked last time, they've opened up only 5 more stores in Florida, only 5 more locations.
Yeah, right.
Amazing.
Right. Yeah. Well, Trulieve, Curaleaf, those are the biggest names in the space in terms of retail. So that's to be expected. Curaleaf hasn't had the run that Trulieve has, which is why we opted for that one in the portfolio rather than Trulieve, which spent the first 2 quarters of the year gaining ground significantly relative to Curaleaf. So,
gotcha. Well, it's good to learn something from, you're the expert on this field, and as you know, I think Trulieve is an amazing company from a fundamental perspective. Oh, by the way, we're starting. So folks, stay away from, and even if you do believe in Biden or Trump winning, whoever, if you want to make a bet on that, stay low. Don't go crazy with volatility right now. Keep your exposure below 20%. In other words, if you're going to buy usually 500 shares, buy 100 shares, because we don't know what's going to happen. And if you really want to hedge your bet, I like some tech ETFs, the ones I've been talking about for the for first part of the year. Most of them are up between 70 and 90%. So tech ETFs are really good right now. Cloud ETFs are good right now. But again, lower your exposure. This is not a time to be a hero right now. Regardless of how the direction you go, wait till the election's over. Because here's the thing. When the election's over, we may not find out who the true winner is going to be. There's a really high chance of that. That's going to cause the market to go nuts with unforeseen. So
on that note, the Supreme Court said that the mail-in ballots would be accepted up to 3 days after the election. Does that imply that we won't actually be able to arrive at a result until 3 days after the election, unless it's very apparent in the physical voting?
Yes, I couldn't have said it better, unless it's just so blatant.
Yeah, which is unlikely considering this election.
And the fact that things are just looking tighter and tighter.
Yeah.
Yeah, I think yesterday, and again, I'm not trying to be biased. I'm trying to be as objective as possible. I think both candidates actually did better, and I think that may bode well for Trump, because people were expecting him to kind of lose it, and he didn't, and he did pretty good. I thought he did well. So again, but the market's the market, and the market is going to like whoever they're going to like, and the market is definitely pricing in Biden right now.
You bet. So what about the likelihood of a stimulus package before the election? Do you think that's going to happen?
Well, and that's very interesting. That's a very interesting question, because you would think it would. And if it would really go a long ways in helping Trump. So I'm thinking that Trump is going to. I think Trump has some wild card. Okay, I think he has a wild card, and I think it's going to be either the trade war. He's going to pull something with the trade war, or he's going to pull something with the stimuli. From what I understand, he's not the one that's holding it up right now.
Sure. Well, the Congress controls the purse strings, right?
Yeah, and for some reason, and I don't understand exactly why. I don't exactly know why that's happening right now. It's a little strange. And again, I don't want to get too political, because this is a financial show, but I do expect something to happen. I don't think Trump is just gonna. It's not like him to just kind of keep things status quo. I think he's going to. I think there's one of three things. Either he has something really damaging to Biden. I don't know, and I'm totally speculating right here. I think he has something on Biden. I think that there's going to be some type of an agreement with the package, with the aid, or I think he's going to do something to lighten the load on the trade war, to become friendlier with China. Those are the three things I'm seeing. I just don't see anything else that could have the kind of wave that he needs right now to make headways. But again, Trump is one thing about Trump we've learned over the last 4 years. It's not good to underestimate him, because he's one of those guys. He pulls the Trump card,
Yeah, well, there's one thing for sure about Donald Trump. There is nothing that man will not do.
Exactly. You can't underestimate him. So it's hard to predict, it's hard to predict with him.
Right.
But again, I'm only going by what the market's showing. And my job is to give you guys the most objective view so you can make the best decisions based on all those facts.
You bet. So then, with all of the governments around the world sort of starting to sound the alarm on the increasing rate of infection with COVID-19 and the implication that is going to generate more government action in the stimulus department, even though ostensibly central banks are not government affiliated, let's just push that little delusion right out of the way. The central bank is the functioning bank of the government, no ifs, ands, or buts. So I think that we're going to get maybe some kind of stimulus package before the election. But regardless, the likelihood of whoever wins generating a huge stimulus package to get the economy moving in the right direction again, to me, that screams that if anything, now is the time to be taking a position in precious metals, gold, and hard assets.
Yes, as a matter of fact, that is something that we're going to be doing a little later today, and I'm seeing a nice spike in FCX, the copper company. I believe earlier, I can't confirm or deny, but I believe we took a position in gold earlier this morning, or are going to take one before the end of the day, a long position. Again, I can't confirm or deny. This is just some talk that's going by behind the scenes here. And also we're also looking at possibly cocoa and soybeans. So we're James, during election time, you tend to have volatility in the stock market and the bond market, which really drives commodities. It's like I'm not a very cyclical guy when it comes to stocks, but I am a very cyclical guy when it comes to commodities. And again, these are just some things we're looking at. Soybeans are starting to make a little headways, and I wouldn't be surprised to see cocoa as well over the next few weeks.
Yeah, it's funny. I live in soybean country at where my farm is, and my neighbor tells me that the prices of soybeans were great. It's just the dry weather left them with poor quality crops. So I guess that's partially why the soybean prices are high, is because there was so much drought and lack of rain across the soybean producing regions of the Western Hemisphere.
Right. And also, as you know, this is very cyclical period for orange juice as well. So because
how is that crop in Florida doing? I'm a huge fan of Florida grapefruit. In fact, I eat one every morning. How's the crop this year?
It's okay. It's not bad. It's stable. We've had a pretty good season last year. We didn't have too much damage. It's fairly stable. But again, folks, I'm just saying the CRB index or commodities right now is something you definitely want to look at. And what I love about is you could do all of this with either a futures commodity account or ETFs. There's an ETF for all and a combination of them together. And they're getting more creative by the day.
You bet. All right, Roger, let's leave it there for now. That was a great update as per usual. I'll look forward to speaking to you next week. Have a fantastic weekend.
You too, James. Have a great weekend. Bye, folks, and thanks for having me on.